Hello friends, Marv Eisen here from Timeless Dollar Trading Academy. And on Monday, March 31st, the market was opening up well below where it closed the previous Friday. Now where it closed the previous Friday was right over here at 56.24. The market was coming in at the open at 55.61. All right, considerably below equilibrium. Equilibrium being the previous day's close. Where was the market going to go? Well, First things first, you have to know that the first half hour to hour of the day is the most volatile period of the day, most of the time. In fact, almost all the time. And it's impossible to know where the market is ultimately going to go, but there are some clues. Of course, the first clue, and I've already said it, is the previous day's close. That's where equilibrium is. Equilibrium is the point where buyers and sellers generally agree is market value. Value for buyers, value for sellers. And so the market was opening up well below that point. Now, as a frame of reference, there's 10 points between each horizontal line on this chart. So 10 points is, at $50 a point, is $500 between each horizontal line on the E-mini. So where is the market going to go? What is the clues that we could have? Well, I know, because I use the Taylor trading zone, I know that the calculated range for Monday is 100 points. And how do I know that? I go to my Taylor calculator and I look at where the calculated range is for the following day. And here, these were my numbers for Friday. And for Monday, the range was 100 points. About 100 points, okay? So let's go back to the chart. And I'm going to take you through the chart starting just prior to the market open. And I'm going to stop it right over here. Now, this is at just about 10 o'clock. This is the 10 o'clock candle, okay? We have a low put in over here at 55.34 and a high that was reached right over here at 55.62, all right? 55.62. Let's go a little further. Okay. So we have a low, and again, we're moving forward to 10.20. We have a low at 55.34 and a high, which was taken out the previous high, up here at 55.80. And again, the earliest part of the day, the beginning of the day, is where the market is most volatile. And so we want to know the clues of where the market is going to go. And so we have a low, we have a high. And what I always counsel is watch where the low or the high is taken out. And that will determine generally the direction of the market for at least the morning session, sometimes for the full day, but at least the morning session. So let's go a little further. Okay, right over here, you see the low, the low was tested here at 55.60, didn't take out the low at 55.36. And the high was taken out, the high that was put in at 55.80 was taken out here at 55.85. So good bet to think that the market is generally going to trend higher for the day. Now, again, the clue was the previous day's close, right up here at 56.25. And so there's one other piece of the puzzle, and that's the Taylor calculated trading zone. And I'm going to put it on the chart, and I drew it out prior to the day's open. And this is generally where the market is going to trade. It's going to trade in this range. Usually it's going to trade in this range, unless there are psychological factors that are going to skew the market, as they did on Friday when the tariff announcements really caused the market to tumble. But those are days that are more or less unusual, and so I'm not even going to refer to that. Today, on Monday, March 31st, the market was generally going to be considered trading up here. And in this point, at 10:30, I took it for a pretty good guess that the market was going to hit the previous day's close, the equilibrium point, the gap trade. Let's take it a little further. Okay, market is going into the trading zone, heading toward the previous day's close. Okay, so here took out the previous day's close. So where was the market going to go? Well, as I told you at the beginning of the video, the calculated range for the day was 100 points, and that's the distance between the support and resistance of the trading zone. Now, the trading zone, as I've said many times, the range is more accurate than the absolute support and resistance. So at this point, actually prior to this point, I transpose my trading zone down to the intraday low. In this case, the intraday low. And I'm going to clone it. And I'm going to bring it down to the intraday low. I'm going to bring the clone down to the intraday low to determine where the market is likely to go. Now, I did my clone somewhere around over here after the market took out the previous high at 10:30, and I generally considered that the market was going to go to the upside for the day. And so the market was going to put in generally considered a 100-point range for the day. And this is what happened. In fact, it put in a little more than that. Let me continue the day. It generally was a trend day, as you can see. All right. Now, the play in this case was the gap trade. This, I would discount the rest of the day. If you got in at around 55.87 and you wrote it up to the gap at 56.25, so that's about 38 points for the day. That would be a 38-point win. Not too bad by anyone's measure. And so that's how I played it, that's how I called it, and that's how I suggest you call it as well. Now remember, watch for where the market takes out either the intraday high or low within the first half hour to hour. And it's not as easy as it might sound to see where the market is going to take out the intraday high or low. The market does try to fool you, but this is something that you really have to learn how to do. Use the Taylor trading zone to determine where the market is going to go, which is going to show you the other end of the candle. Remember, each day's trading range is represented by the candle, not only the real body, but the shadows as well. And that's what the Taylor calculated range is going to tell you. So that's my video for today. Thanks so much for watching. Trade safely, and I'll see you in my next video. Marv Eisen for Timeless Dollar Trading Academy.